Hello and welcome to this August 11th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're looking at Energy Transfer Partners LP, ticker symbol ETP. This is about a $9 billion basic materials company. It's not really that we would look to trade this stock. This is more of an educational stock that we've seen recently. We thought we'd point out. A lot of questions always surface as to when you might want to think about selling a stock, and I think this chart really kind of paints a picture here. So what we would do is just simply point out that the stock, after downtrending back in May, you can see we bottomed and started making this move to the upside. Notice that all the way up during this move to the upside, the MACD continued strengthening, pointing higher and higher. But notice when we got to the high in early August, the MACD had actually come down. So all the way from the bottom in May to the top in July, we had a MACD that was conforming and moving along with prices to the upside. So the MACD kept moving to new highs while prices kept moving to new highs. And it wasn't until early August that that changed. You can see that when we moved up here in the first week of August in terms of price, the MACD had rolled over and started turning down. And what this tells you is that the 12-day moving average and the 26-day moving average were starting to converge. All the way up, the 12-day moving average was pulling away from the 26-day moving average, so they're diverging, and that's what should happen when prices are moving higher. Your 12-day moving average reflects those changes in price a lot quicker than a 26-day moving average. 26-day moving average is going to smooth it a little bit more longer, over a longer period. So as prices keep moving up, you would expect that 12-day moving average to move up more rapidly than the 26-day moving average, and that's what happened all the way up through this move to the upside. But a negative divergence, a long-term negative divergence, prints when you start seeing prices continuing to move higher, but the MACD not following suit to the upside, and we start seeing that convergence between the 12-day and the 26-day moving average. So the MACD is telling us that the momentum is starting to slow on the stock, even though prices keep moving higher. So if you're not paying attention to the technical indicators that we follow, there's a good chance that you would probably look at this chart and say everything's fine. Prices are moving up. I'm at a 52-week high, or at least a 6-month high in this case. And I think that the majority of folks would look at it and say everything's fine. Prices are breaking out. This is a wonderful stock. Well, if you're looking for a time to sell from a trading perspective, this is one of your warning signs right here. Price is higher, MACD is lower, off of an extended uptrend. Notice these green arrows that I've put in here. As prices kept moving up and the MACD kept moving up, every time we had weakness back to the 20-day moving average, notice how the prices bounced back up again. That happened on 3 separate occasions where we tested the 20-day and then continued moving higher. But notice once we put in the negative divergence, the 20-day no longer held as support. This is a classic pattern in an uptrending stock, and as long as you've got a positive MACD that's pointing higher, you tend to get these positive bounces off of the 20-day. But once you get that negative divergence in place, that's when we start thinking, a light starts going off. The 20-day is probably not going to hold to the downside, or at least the risks are greater that the 20-day will not hold to the downside. And as a trader, that's very important. Notice also heavy volume accompanied the selling on the way down here, so clearly it was much easier for the sellers to get control of the stock. And we also were very overbought. So in addition to the negative divergence, we did have overbought oscillators in terms of the RSI and stochastics. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.